Welcome to the deep dive. All right, let's rip into this stack of sources. It covers what was, well, definitely a wild week for Bitcoin.
Absolutely. We've got headlines about huge corporate money flowing in.
Yeah, massive investments, but also sharp price drops, governments making moves.
And yeah, even some pretty serious crime stories mixed in there. It really felt like one week captured so many different sides of crypto.
It did, the institutional ambition, that persistent volatility, and like you said, the challenges with illicit stuff.
Liquidly.
So our mission here for this deep dive is to take all this mix and pull out the key insights, find the surprising details, connect the dots.
Right. Try to give you a clearer picture of not just what happened, but maybe what it shows us about Bitcoin right now.
Let's unpack it.
Well, what's fascinating right off the bat is the sheer contrast in the sources. Just within a few days, you see these major signals of, traditional capital really leaning into Bitcoin.
That's where it gets really interesting. The sources talk about Trump media planning a huge $2.5 billion investment in Bitcoin.
Billion, yeah. Using a big chunk of their cash reserves.
And GameStop. Remember GameStop? They also disclosed a substantial buy, over $500 million in BTC.
Right. These aren't small players anymore. It feels like a clear signal. Large corporate balance sheets starting to see Bitcoin as, well, a treasury asset.
Strategically, not just speculatively.
Exactly. But then, almost right after that kind of news hits, the narrative in the sources just shifts dramatically. The price action, it wasn't a simple surge up.
Oh, far from it. Bitcoin actually took a sharp dip, fell below $110 K. It makes you stop and think, why would the price drop right when big companies are announcing these huge buys?
It just highlights how layered the market is, doesn't it? That dip triggered, according to one source, over $600 million in liquidations.
Wow.
That's basically forced selling for traders using leverage when the price moves against them. Analysts in the sources were suggesting it could be profit-taking, maybe broader market jitters.
It shows how quickly leverage can just amplify those swings, up or down.
Definitely. So you've got this push and pull, big money coming in, but the price is still vulnerable to these sharp corrections, leverage unwinding.
And then, layered on top of that, the sources talk about significant movement on the regulatory front. They mentioned the U.S. Senate advancing the Genius Act.
Right, and this bill, as reported, is specifically aimed at stricter regulation for stablecoins.
Why stablecoins, though? Why the focus there?
Well, they're seen as this critical bridge, between traditional finance and the crypto world, used all the time for trading, for transfers.
Okay.
So regulators, as the sources seem to imply, see a need for clearer rules to manage potential systemic risks, ensure some stability in the wider ecosystem. It shows governments are actively trying to figure out where crypto fits.
Trying to bring some order to what some still see as the Wild West. And speaking of the Wild West, just to complete this chaotic picture for the week, the sources include some genuinely alarming crime stories.
Yeah, those were stark. A major scandal in the Czech Republic reported linked to $45 million in Bitcoin, leading to a minister resigning.
And that kidnapping in NYC. An Italian crypto investor, a multi-million-dollar Bitcoin ransom plot.
Yeah.
It's serious stuff.
It is. And while it's grim, it's a reminder that alongside the innovation and investment, digital assets are still sometimes tangled up in crime.
Highlights the ongoing challenges for law enforcement, the need for security, user vigilance. The sources definitely didn't shy away from that side.
Not at all.
So, okay, when you put it all together, multi-billion-dollar corporate plans, stomach-dropping price dips causing massive liquidations, lawmakers focusing on stablecoins, literal Bitcoin crime plots. It really feels like a market being pulled in a dozen directions at once.
It absolutely does. It forces you to look at Bitcoin's identity right now. On one hand, yeah, it's maturing, attracting serious corporate interest. Right. But on the other, it still has these characteristics of extreme volatility, vulnerability, things that attract bad actors, and naturally regulatory attention.
But connecting this back to the bigger picture from the sources, despite all this short-term chaos, the long-term outlook analysts present is still pretty bullish.
Remarkably so, actually. Yes, the sources mention analysts projecting Bitcoin could hit 180K, maybe even 250K by late 2025.
How did the sources square that? How do they reconcile that prediction with the kind of week we just saw?
What's interesting is the reasoning they give. They point to continued significant inflows into Bitcoin ETFs, those funds making it easier for traditional investors.
Getting exposure, yeah.
And the ongoing impact of the recent halving event. Remember, that cut the rate of new Bitcoin creation in half.
Creating that post-halving supply squeeze everyone talks about.
Exactly. The sources suggest these fundamental drivers, ETF, inflows, supply squeeze, are seen as powerful enough to potentially outweigh the week-to-week drama and the negative headlines.
Okay, that makes sense. So this past week really serves as a kind of snapshot, doesn't it, of Bitcoin's complex reality. It shows both that immense potential attracting giants.
And the inherent risks, the uncertainties playing out in price swings, regulations, these darker stories.
It forces a key question for anyone watching this space.
It certainly does.
So looking back at this really eventful week, from those multi-billion-dollar corporate plans to sharp price dips, government action on stablecoins, and even serious criminal activity, how do you weigh that potential for significant long-term growth against the inherent risks and the uncertainties that we just saw play out? Definitely something for you to consider.